Well, good afternoon, everyone. Thank you very much for joining me. This is the NFP Live Trade. Today is the 6th of May, 2022. It's actually 23 minutes past the hour. My name is Russell Shaw, Senior Market Specialist at FXCM. And my email address, rshort@fxcm.com. Just going to bring up our high-risk investment warning. I want to keep this on screen for a few moments. And then we'll just bring up our commentary disclaimer. Thank you, everyone, for joining. Here's our market commentaries disclaimer. And here's our references. So we're going to generally be looking at FXCM Market Scope, Forex Factory. I am going to be looking at TradingView as well. The reason that I've got TradingView, I've got the FXCM US dollar here. This is the US 10-year. We're going to be trading on a live account. So on a live account, as an employee of FXCM, I don't get access to the US dollar on my platform. So we'll just keep it on, we'll just consult TradingView, and this is the 1 hour time frame. All right, here's Forex Factory. We'll just bring this up as well. We've got 5 minutes to go. And you can see that the non-farm employment changes number here, we're expecting 390,000. The truth of the matter is that it's quite varied. It's quite varied on a number of estimates out there. And let's just go through to the platform. We're going to be trading Euro US dollar. We're not going to be putting on an entry before the non-farm payroll. We're going to wait, and I'll explain that in a moment. I've got the Euro US dollar 1 hour. I've got the Euro US dollar 15 minute, and the 1 minute is where we'll be doing the trading from. So we'll just keep an eye on all three charts. Now, how are we going to do this trade? I'm going to just bring up my Microsoft Paint. I'll bring this across. Just want to double check. Can you guys hear me loud and clear? Just give me an indication you can hear me. Just type in a Y. All right, good. Thanks, Joachim. Thanks, Carl. Thank you very much. All right. Generally, what happens after the move is we get an impulse, right? So we kind of get a move that either it's going to shoot up or it's going to shoot down. It really depends if it's dollar sort of positive or dollar negative. And then we're going to just watch for this impulse. We're going to watch for the pullback, and we're going to try and catch the next leg up. And what I've noticed in the last few trades, we tend to there tends to be a lag for this leg over here. Nevertheless, we'll try and catch it. When I say a lag, we're usually on the right side of it, but it takes a full half hour, sort of full hour before it kicks in, and we end up in a sideways market, and then it becomes stop loss management. Our targets are going to be 20 pip take profit or a 20 pip stop loss. The second target is going to be to reduce stop loss, and the stop loss management has really been what we have been doing in the past non-farm payrolls, because of the time lag for the market. So we kind of recognize what's happening, but for the market to react on the second impulse, we've got to just hope that the volatility is, of course, there. Let's just go back to the Forex Factory. And so what we want to keep an eye on is, of course, the 390,000. We want to keep an eye on the average hourly earnings, because employment costs are up. And what we want to do is we want to keep an eye on the just we want to keep an eye on the US unemployment, not the Canadian. We want to see if it comes down to that 3.5. Of the three, the unemployment rate probably the least important. We want to see this guy, and we want to see this guy. Now, in our analysis this morning, so we do a morning market review, and it's on our YouTube channel, it's on our Telegram channel. I am getting quite concerned about employment. There tends to be a lag in terms of an unemployment increase once we have a high inflation, low growth. So I wouldn't be surprised if we start over the next few months getting the forecast here marked down. So just some interesting series to watch there. All right, we've got 20 seconds, so let's go ahead and bring up the Euro US dollar. Let's see how the print is. And okay, 9 seconds here. 5 seconds. Okay, there's the spark. Okay, there's the spark. Let's see. So at the moment, the market's a little confused. All right, there it's pushing towards euro side. So something's come out that's perhaps negative dollar. Although the market a little confused, you can see that there it's pushing again. All right, let's see if we can get some numbers out here. I'm also just taking a look at my Twitter. It's usually slightly faster. Oh, look at that. Okay, so now there's a big shoot up. So money rotating out of the US dollar. Okay, money rotating out of the US dollar. Let's go ahead and see what we can see here, and we'll just all right, so we've got 428,000 coming in, so a strong job number, 428,000. The average hourly's missed. That's why we're getting movement out of the US dollar, because the inflation number missed. So all eyes have been on inflation. All right, so there's the miss there. Unemployment rate ticking up, but we're still at relatively good numbers. The unemployment, remember what I said just a moment ago, I'm getting nervous that this unemployment rate is going to tick up in the coming months because of our slowdown. All right, so the inflation there, I think, is the big story. And let's see if we can get into a position here. Not very easy. Take a look at this. So this is a very, very odd candle price action here. All right, we're going to take the long here. Just give me a moment. We're going to put on the long. Remember, we're going to have a 20 pip stop. And a 20 take profit. Right, here we go. All right. Let's see. Okay, so there's the take profit. Here's our stop loss. Let's open this up here and see if the market does start selling off those dollars, because there's a miss on that inflation number. Let's see if we're reading that correctly. Now, we also want to get the 20 pip up as quickly as possible. That's the other objective that we had. Okay. All right, I want you guys also to keep an eye on the stochastic. I'm a big fan of the stochastic. It's my favorite indicator in terms of momentum. I like using moving averages as well because they're trend following, acknowledging that there's a lag there. In order for this to really be in our favor, the stochastic has to get above 80 and it has to stick there. Okay? It has to stick above 80. If we get that, then we'll get some momentum to the upside. If we see the stochastic falling down, well, I'm afraid then our stop loss is going to be hit. So let's just keep an eye. We want this to get into the 80, and we want to start moving our stop loss up as soon as we can. Let's put in some resistance so we can clearly see here's the resistance, can't we? You can see that we've hit that now 4 times. 1, 2, 3, 4. This is the 5th minute, and so there's some selling pressure just above us. Okay, so it's a very confusing report here. We've got a massive job creation, but the unemployment rate ticking up slightly. That's a bit odd, isn't it? And then I think the big story here is that inflation coming in sort of moderated a little, which I think is actually probably a good thing, given the hyperinflation that we have at the moment. When I say hyperinflation, let's just rephrase it to the 8% headline. All right, you can see now we've kind of lost some of that momentum, right? What's happening to the stochastic? It's gone into no man's land, right? It's gone into no man's land. That's a bad sign. Okay. So we've got to get this this thing back into 80. If it drops towards that 20, then we're going to get stopped here. So now we're in that resistance area again. So we just want to keep an eye on this. The bulls are battling. Let's just actually extend this. This whole area here seems to be quite heavily guarded by the dollar bulls, the euro bears. Right, here's a little bit of. Okay, we're going to start moving our stop loss up as soon as we get above this resistance. We're going to be quite aggressive with this. I'm going to move it all the way up to this this candle here, which looks like there's some support. 1, 2. These 2 candles here look like there's some support. So I'm hoping I can move this up, but I don't want to move it too soon, and I'll move it up if we can get above this resistance. Okay, so you can see that we're still battling this resistance. Okay, let's start moving this up slightly. We can't move it up too much. I'm just going to move it up to the end, the tail end of this candle here. So we went a little bit out in terms of risk. So we've taken out just about 3 pips of risk. Okay, so I'm encouraged by the stochastic. It is moving in the right direction. We're getting to that 80 level. Okay, that means there is a momentum that that's building, and we want to just keep an eye on that. Stochastic is a great indicator. There's no overbought, oversold. I think that it's very important to say that a lot of the literature out there says over 80 is overbought, under 20 is oversold. That's not the case. The best way to think about the stochastic is in terms of range. Okay, so the settings for the stochastic, I like a 15 period. So we're looking over 15 minutes here, because this is a 1-minute chart. And then where are we sitting relative to the 15-minute range? And we're kind of here, which is quite bullish. there is a bit of a lag here, and you can see that this resistance here is now proving to be quite formidable. If this rolls over, again, I want to stress we're in danger of getting stopped here. Okay, so let's just keep an eye on that. All right, so this is an interesting pattern that I'm starting to see here. So I'm hoping this is a higher trough. I'll just draw in what I'm hoping it is. If whether it is or it isn't, I can't tell right now. But I'm hoping it's a movement like that, and then I'm hoping we can start moving up, and this actually becomes a higher trough. If that is the case, we want to take out again the resistance, start moving up the stop loss in a more secure type of, I guess, in a more forceful manner. Just going to extend this resistance here. You can see that it's really proving to be quite formidable. We've hit it 1, 2, 3, 4, 5, 6, 7, 8, 9. Okay, this is the 10th minute now, so it's 10 minutes past the bottom of the hour. And this resistance, the bulls here, I beg your pardon, the bears here are getting quite strong. You can see we had a close here and then it gapped down to there. So there's a lot of pressure here in terms of our position. Okay, so let's move this guy here. What we'll do is we'll start looking for the higher trough here. This was quite a damaging minute here. This really it really pushed us right down there. Because you had a uncertainty there, then the bears took a real push here, uncertainty here, and we just want to see if we can regain some sort of control. When I say we, talking about the bulls. Okay, so the stochastic rolling over here, that's not a great sign. Okay. A little bit of support coming in, but still a bit nerve-wracking. We're pretty close. We've got 3 pips away from the stop here, so just be aware of that. A little bit of support. Okay, 6 seconds, we get another candle here, and so far we firmly on the wrong side, unfortunately. Let's see if we can get some sort of bullishness from here. All right, that's a little better. So I'm looking to see if this now becomes the higher trough. Just in terms of a fib, okay, that's a 62% retracement right there. So hopefully that's something that is going to aid our position. Let me add a watermark here. So the bulls trying to rally here, but they have been pretty overwhelmed. Okay, that's a better. Okay, so I'm hoping this is the higher trough. Okay, another 34 seconds, we'll get the next, another 30 seconds here, we'll get the next candle. We've actually got the lower peak here. All right, let's put in an arrow there. There's the lower peak. Okay. Here's the stochastic that was really driving downwards. So we've got a 16 pip loss there, unfortunately. All right, so we've got, let's just go back to the 1 hour here. Got a big selling tail here, the central pivot acting as support. I'm still of the opinion that we may get some sort of euro support. So just keep that in mind for the afternoon. The hourly stochastic is moving to the bullish side. The EMAs have crossed to the bullish side. Let's see if this central pivot holds. Okay. If there's any questions, please go ahead and type those through. Any questions? Please go ahead, type those through. Right. Nothing coming through. So what we'll do is we'll wrap up here, and of course we'll do it all again next month on payroll. Thanks very much, guys, and chat to you then.